Hello guys, and welcome back to another video. In this video I'll be going over liquidity. So first off, what does liquidity mean? Liquidity simply refers to old highs and old lows where traders will place their stops. So above any old high and old low is where there is liquidity. Why is this? Because traditional psychology of traders is to place their protective stops below old lows and old highs. If somebody went short in this region here, they would place their protective buy stop above this swing high here. Similarly, if somebody went long over here, down here, they would place their protective sell stop below this swing low right there. Now, above old highs is something called buy side liquidity. Below old lows is sell side liquidity. So now if we mark out this chart right here, above this high or these highs here is buy side liquidity, right? Above this high is buy side liquidity, this high is buy side liquidity, below this low is sell side liquidity, and below these lows also is sell side liquidity. So any high and low, above and below, there is liquidity below them. And then specifically above highs is buy side liquidity and below lows is sell side liquidity. Okay, so now that we have that covered, okay, we're gonna go into the next thing. The next thing is relatively equal highs and relatively equal lows. So the definition of relatively equal highs simply refers to where there is two highs in close proximity to one another in terms of their height. So as you guys can see, these we would refer to as relatively equal highs because they're almost relatively equal, right? They don't have to be exactly, but we refer to them as relatively equal because they are relatively equal in height. Okay, and why is this important? Because when we have multiple highs in close proximity in terms of height, retail traders will look at that and see that as resistance. This means that large amounts of traders will place their buy stops, protected buy stops, above these highs. This means that these regions and areas of price action will have a large amount of liquidity, much more than singular lows. Okay. Similarly, the same can be said for relatively equal lows, which is lows which have the same depth. Okay, so you see these two lows here, this one right there and this one right here, they are both relatively equal. Okay, meaning that retail traders will see this as a place of support. It touched once, here it touched one more time, touched again, so they'll see this area as an area of support, and they'll have a large amount of liquidity because they'll see this as an area where the market will likely reverse and go to the upside. However, this is wrong. They will place their sell stops here, and as you can see, the market then takes that out right here and they will be at a loss. So now that I've explained to you the terms liquidity, buy side liquidity, sell side liquidity, relatively equal highs and relatively equal lows, I'll now go over some examples to show you a practical sense of what this would look like in your day-to-day trading. Okay, so here I have the chart of Euro USD. We're on the 1 minute time frame, and I'm going to show you how to implement this into an actual trade idea. So far we can see that the market has been extremely bearish. We've been moving to the downside. Okay, and we can see, like I mentioned earlier, we have relatively equal highs here. Traders that were short, they will place their protected buy stops above these highs here, looking to capture more of the down move. They'll look to place their buy stops there, right? So now we can mark out these areas in our chart like this. So above this area will be buy side liquidity, above these highs will also be buy side liquidity. So you can mark these out on your chart to look for targets. And generally when we're looking to go long, for example, we'll be looking to target areas of buy side liquidity or old highs. And if we're going short, we'll be looking to target old lows or sell side liquidity. Okay, so these are the general areas that we'll be looking to target. You can also target these areas over here for partials as well. Okay, so now if you look here, what's below an old low? Sell side liquidity, right? Okay, so I'll mark this as sell side liquidity. Now here's an important thing I want to mention. When we look for reversals in the market, what will usually happen is old low will be taken. If we're bullish, an old low will be taken out, like this one here, and then the market will reverse. But why is that? Well, that's because smart money will look to trigger the traders that went long here. They will look to trigger their sell stop by going below this low, putting these traders here that went long at a loss. Now they will be selling at the market because of their protected sell stop. So now there's a large influx of sell side liquidity. Smart money would then look to buy those sell orders at the market. They will look to buy that because for there to be a buyer, there has to be a seller. So these people that lost here are selling at a low price. Smart money are now buying at a low price. That's what liquidity is essentially. It is the transactions in the market that occur every single day, every single second. That's how a market books, right? Liquidity, meaning transactions that occur in a marketplace. Right? Okay, so now that we have that concept understood, we can now understand why markets reverse below old lows and old highs. The same would be said for old highs. The market will look to go above it. These people here will have protected buy stops. So what will happen? Smart money will look to go above the highs, and then they will look, these people here will now be buying at a high price, right? Because they have protected buy stops above these highs here. So smart money will look to sell to these people who are buying at a high price, right? For there to be a seller, someone has to be a buyer. Is it starting to make sense? So smart money will look to sell to these people buying at a high price, and then they'll look to buy back their position at a cheaper price. That's how they make their profit when selling. Similarly, when they're buying, right, they'll buy low and then they'll sell at a high price above willing buyers. You see how that makes sense? It's very logical if you think about it like that. So now I'll be going over this example here. So as I said, this is sell side liquidity. We'll look for that to first get taken before we look for our reversal pattern to then target the opposing buy side liquidity. Okay, but first off, guys, we must mark out our range. See where we are. Are we in a premium or discount? So far we are in a discount, right? This is equilibrium. That is the high to the low. This is 50% or equilibrium. Anything below 50% is a discount, meaning a cheap price. Anything above is a premium. We want to be buying in a discount. So that's the general range we have right here. So let's let price play out. Now this is how you would be looking to trade liquidity patterns. Sorry, liquidity. Okay, so now we've traded below this swing low right here. Now, what has happened here? These traders that went long are now at a loss, triggering their sell stops, and they are selling at the market. Smart money have already bought below this low right here. This is also known as a turtle soup entry. They are buying below this swing low, this low here, right? They're buying those orders up, and they're accumulating their long positions to now target those willing buyers at a high price. Okay, so then once we've seen this swing low getting traded below, we will look for our reversal pattern, which will be a displacement to the upside, market structure shift, and then we'll look for a bullish order block or fair value gap to enter off of. So let's see this play out. Okay, so what do we see? This swing high here. You see it aggressively displaced to the upside. That's our market structure shift. Market structure has now shifted bullishly. Okay. Now, what else can we see? These 3 consecutive down close candles are what? It's one bullish order block. We will enter off of the opening price. Like that. That will be our entry. And then we will place our stop loss right at this low here. Okay, so this is our risk we've now assumed. Okay, and then now we will look to target, as I said, the buy side liquidity, the willing buyers up here, these relatively equal highs. Retail traders are seeing this as what? Support. Touched it once, touched it twice, failed to get up there, so they're going to see this as resistance. But now we know, as smart money traders, as ICT traders, we know that these have insanely high amounts of liquidity, which is perfect for pairing the orders that smart money bought here to willing buyers at a high price. So now if we set our take profit above these highs here, let price play out, and what do we see? We hold price, hold, be patient, and boom. Just like that, we tagged it for a nice 1 to 6 risk to reward. Let me take a second, guys, to introduce you to my private mentorship. Now, guys, when I tell you that this is a golden opportunity for you to absolutely change the trajectory of your trading career, I mean it. So what you will get with this mentorship is you will learn the exact model that I have taught to members, which has helped them to scale to over 7 figures plus in funding from prop firms. And they are consistently making $10,000 a month from trading and quitting their jobs for good, guys. I have students that are literally making yearly and monthly salaries in a day. These guys are making doctor salaries in a day, guys. It's not a joke, guys. This is what's possible when you have the skill set. Now, you guys will also get a bunch more benefits as listed here. It's a lifetime access for this mentorship. There's no subscriptions. You pay one time only. Okay, guys, I'm putting the price down by £100 for a limited time only, but I'm going to put this back straight up, guys, so make the most of it while you can. Okay, and guys, stop wasting your money on these prop firm challenges. You guys are giving away thousands to these prop firms and blowing challenge after challenge without you actually learning the skill in the first place. So guys, I'm willing to help you learn the skill set, so then once you learn it, you can make as much money you possibly want. Okay, so again, guys, first thing in the description, make sure you join right away, as this offer will only be on for a limited time only. So with that being said, let's get straight back to the video. Okay, guys, now we're going to go over into our second example, which is now a chart of NQ. Okay, so first off, I'm now on a 15-minute time frame. I'm going to mark out my liquidity pools. Okay, so I have my old low right here, which is what? Sellside liquidity. I'll drag that along, and also we have what? We have these relatively equal lows right here and here. Okay, so we'll look for these and this to get traded to, and then we'll look to target our buy side liquidity pool right here. Okay, can you see these two relatively equal highs? We'll look to target that. Okay, yes, it has been traded above, but remember, retail traders will still see this as touched once, touched twice. They will have their stop loss way probably above here, right? So we can still reasonably assume that these highs will be taken out. Okay, so now we're on a 15-minute time frame. We'll be patient and we're going to let price trade below this old low here, which is sell side liquidity, and then we're going to frame our reversal pattern, look for our market structure shift, displacement, and then we'll look to enter and target these relatively equal highs in the form of buy side liquidity. Okay, so let's play price out. See, we're drawing towards that. That's our current drawn liquidity if we're up here, looking for that to get targeted. And as you guys can see, we've targeted that. So now once you've seen this, right, we've marked out our 15-minute buy side and sell side liquidity pools. We will now drop into our lower time frames. So this can be our 5, 4, 3, 2, or 1 minute. Okay, guys, now that we've traded below the sell side liquidity pool here, we're now going to wait for some displacement and hopefully enter off of a bullish order block, fair value gap, any discount array of your choice. Okay, so now let's let price play out, see what it does. Okay, you see that? There's our displacement, and I would have been long right here. So as soon as we went above these two consecutive down close candles and closed above it, right, you see on this candle right here, we closed above it, and in this candle here to the right of it, I would, on the retest of that bullish order block opening price, I would have entered right there. So that would have been my entry, stop loss at the low, swing low, and I'll be looking to go target the buy side liquidity right there. Now let's let price play out and be patient. Okay, one second, let me just drag this out. Okay, so let's let price play out. Sorry, there we go. Have to be patient, guys. Okay, and there you go. Nice 1 to 12 risk to reward. See that? Smart money bought the sell stops below this low here, and then they bought back their position at a much more premium expensive price right here. That's how they made their profit. You see that? They bought low, they sold high, and that's how liquidity works. It's a transaction in the marketplace. So hopefully you guys now understand everything about liquidity, and if you can really understand this concept, I guarantee you will definitely improve your trading and be more confident in the markets. So if you guys enjoyed this video, definitely go check out the link below in the description for my private mentorship. If you have any questions, please leave it down in the comments below, and I'll see you again next time.